Hello everyone, this is Matthew Frailey with Breakpoint Trades. On Monday evening, I posted a detailed video review of the markets, commodities, and trade ideas. And with the action on Tuesday, I decided to do a follow-up video. So this is a technical review of the market's action as of Tuesday's close. The reason why this says Monday morning is because I'm recording this pretty dang late on Tuesday evening, so most of you will probably be reviewing this on Monday morning. Anyway, again, I'm Matthew Frailey from BreakpointTrades.com. We've been doing technical analysis on the markets, trade ideas, and mechanical systems. We work with individual traders, mom and pops, and institutional traders. And we've been doing that since 2003. So let's get started here. Again, we're just going to try to make this a pretty quick newsletter. Looks like I got a typo here. But just going to look at the indexes real quickly and some trade ideas. As far as the market, we had another nice follow through today. S&P pushed back above 4,500. You know, as I stated before, the bulls have had the ball and they continue to advance that ball. All right. So another nice follow through. We're just a hair's breadth away from all-time highs. The Fang Index actually made a new high today. This is your current resistance on ES. We'll see how that is on the Monday morning. And let's go ahead and get started with the charts. So here's a daily chart of the major indexes. Again, nice push today. Nice recovery off those October lows. You know, the Dow, all these aren't very far from the September highs now. The Russell's still lagging here. It's been in this range bound since March. Kind of has this coil pattern, still kind of stuck around here. But nice continued move. We are quite stretched, overbought in the short term. Okay, so maybe we get some pullback on Wednesday would be my thought. Moving on, let's look at the S&P 500 first. So the S&P, as you know, we had that correction in September. Seasonality played out. We essentially had a zigzag ABC type correction. You know, at the time, we didn't know if we were going to form another lower high, eventually come down to the 200-day moving average. But as you know, we're in earnings season. Markets tend to hold up in earnings season, and so far, it's done that. We regained the 50-day moving average here. We got through this resistance zone, and we're just a hair's breadth away from this high. You can see the ribbons flipped back positive. And again, just a little overbought short term. Like I said, you know, we've been up 4 days in a row now. And we've had quite a few gaps here. Here's the 2-hour view of the S&P. Last week on Wednesday, I showed this inverse head and shoulder pattern. I know a few other technicians showed the same, also a diamond pattern, but clearly this has played out very nicely. We took out that neckline last week, have continued nicely higher. So, moving average ribbons here, again, they were a good guide as well. They were a great guide back here when they pinched on the bearish side. Whenever you have that, that's a great short opportunity. And anyway, again, short term, they're a bit wide here. So, you know, maybe we get some reversion to mean pullback soon. RSIs are pretty stretched. No divergence on the MACD, though. So that tells you that so far the uptrend is at least healthy. And, you know, pullback will probably form another higher low. Here's the next chart, 60-minute chart. You know, we had this channel, which we busted out of last week after that simple ABC pullback. You know, the ribbons have been firmly entrenched in this trend. Any divergence here in the MACD, it's kind of lagging. There is divergence on the histogram, obviously. Let's look at a smaller time frame. Here's a 30-minute view. So the 30-minute shows you the same channel. And we took out that resistance zone that I talked about on Monday evening. Now, we do have some nice MACD divergence here on the 60-minute time frame, so take notice of that. Again, divergence by itself is not a sell signal, but it is something to take notice of, and it could either be negated on a further push or, you know, we could play out here. So this area here is possible support now. One thing I didn't show on this chart is we got another yet open gap here, right? So let me draw that in. So we got yet another open gap. You know, we have an open gap here. We got an open gap here. Got a lot of gaps. These gaps eventually do get filled. Doesn't mean they have to get filled right now. obviously. But, maybe if we get a pullback soon, maybe this area acts as support. All right. All right, let me go to the next chart. Here's a 15-minute chart. Again, divergence building here a bit, but we'll see if we get a pullback on Wednesday or not. Futures are down just a couple points as of this recording. Moving on to the triple Qs. Again, this pushed through the resistance zone. Now, it's still further away from its high here. And the volume's been a little lighter here. So that is something to watch. So be aware of that, guys. Again, we're in earnings season. A lot of big names reporting. Netflix reported this evening. I think it was initially up, and then it was down afterwards. We'll see how that opens on Wednesday. Tesla reports on Wednesday after the market, and that's been a hell of a mover. So, again, overall, the Qs are, still quite a bit off their highs, unlike the S&P and Dow. Here's the 60-minute view of the Qs. Any divergence here in the MACD? Not really. Obviously, on the histogram, we have some. But quite a move here. Moving on to the VIX. Here's the VIX. So the VIX pulling back again with the market rallying, as you'd expect. Actually, let me back up a minute. Let's look at the Fang Index. So this is the NYSE Fang Index. Contains a lot of the, Fang stocks. And this made a new high. And let's face it, these Fang stocks have such weighting with the market. So that's obviously been helping the markets. And really technically got a perfect ABC zigzag into the 200-day moving average. And rallied right back to new highs. All right, moving on to the VIX. So down today a little bit, as you'd expect for the market. Now, one observation I'll point out here. The VIX generally finds support at the lower Bollinger Bands. But to me, with the lower Bollinger Bands moving down like this, it's really difficult for the VIX to tag that. And when I see this, usually what you'll need is you'll need a move up in the VIX to allow, say, the lower Bollinger Bands to curl up a bit enough that the VIX can then come down and tag it. So that's telling me that we'll probably soon see at least a brief pullback in the market just to get this lower Bollinger Bands to curl up like that. We'll see if that ends up playing out. Here's the chart of the VIX on a 60-minute time frame. Notice on the 60-minute you have MACD divergence setting up here, RSI divergence, so maybe we get a little bounce here, suggesting so. Here's a chart of the VXX, sort of mirrors the VIX, one of the VIX ETFs, so has the same thing. You can think of this as a hedge if you need a short on the market to hedge against some of your longs. This looks like maybe a viable bounce trade. Next, move into these Mclellan oscillators, and this is something I've discussed before. So back in early October, I pointed out how the Mclellan oscillators had spiked outside of their upper Bollinger Bands. And when I looked back in the past, most of the time when you saw that after some sort of bottom, that usually was a good sign that the bottom was in the market from the recent declines. So you had your declines back here where, starting from September, the Mclellan oscillators close below the lower Bollinger Bands twice. Remember, when that happens, you get a nice bounce trade. It's a very reliable reversion to mean type system. You could see examples in the past. But usually what my observation in the past has been when you get a nice correction in the market like this, and it closes below the lower Bollinger Bands and you get a rally, if it closes above the Bollinger Bands briefly, when you get overbought, usually that tells you a bottom is in. So that was a pretty good sign back here. Here's some past examples. Here's another Mclellan oscillator. This is the Dow. But I think the S&P version had the same thing. So this is the March 2020 bottom. The Mclellan oscillator went below here during that decline, as you'd imagine. And then you had a rally. And it quickly went back above the upper Bollinger Bands. price was overbought, but that was indicative that there was some sort of bottom in place. All right. Moving on, TLT 20-year bonds, they were down nicely today, stalling at some of this resistance area that I talked about on Monday. When these pull back, rates go higher. Moving on just to a couple commodities. Here's crude oil. It continues to follow through. Again, it's in a very strong uptrend. I think it goes much higher in the long term. You know, short term, your support is the 9 EMA. Longer term now is your support's around the 77. Here's a chart of UNG, natural gas. On Monday, I talked about to watch the 50-day moving average. I said around there would be a buying opportunity, and you could see almost tagged it with the ETF, gave you a little bounce trade right off the 50. Here's the actual commodity itself, and you can see it actually did tag the 50-day and bounced. Again, that's what I discussed on Monday to watch for. Moving to cryptocurrencies. Bitcoin, as you know, it's basically back to the April highs. It's been a hell of a move. Just a beautiful trade. We've had some awesome trade setups here, especially in the various crypto stocks. Now, interesting what's going to happen. Do we pop up above resistance here, pull back, find support at previous resistance, become support? Or do we pull back here at resistance and then break out? Overall, I do believe it is going to bust through this resistance. But the question is, do we break it now, then pull back, or pull back first, then break out? But congrats if you guys bought this very obvious ABC pullback back here in September when we discussed it. Here's Ethereum. Now, Ethereum tends to lag Bitcoin a bit as a lot of the, folks pile into Bitcoin, but eventually then it flows into the other cryptos. So I do think Ethereum will also be catching up here. You got a nice, they don't have it drawn in here, but you obviously got a resistance here. Next, looking at some of the crypto type stocks. Here's Coin, Kathy Woods, as you know. So we had this as a long idea last week. Beautiful move. You bought this in the 250s. Really strong move. Look at that buy. I'm obviously getting a bit extended here. Don't chase it now. Look how far you are extended above the 90 EMA. But if you bought it down here, you can obviously trim some up. You have a great profit. Mara, probably my favorite one. We had this as a long idea back here. We actually had it as a long idea back here also at the 200-day moving average. I call these where you undercut the 200-day and then reverse 200-day moving average pullback rejection. So we had a buy signal back here. We also had a bear flag back here. We had it as a short. And then you had a pretty obvious, 200-day moving average down here. That was an easy long or a trend break of this trend line. Then I pointed out a bull flag late last week at this 44 area, and that's been an awesome trade. Up 20% just from there. Obviously getting a bit extended, but it's in a very strong uptrend. It's healthy. So here's Riot. Now this one continues to lag a bit. We gave this as an idea on Monday. Powered through there a little bit. So again, it's stalling, but the volume pickup here is pretty decent. So I believe it'll play catch up. Rising tides raise all ships. So a lot of these crypto type stocks are going up. There's a ton of these stocks, guys. It's almost getting too many to handle. Here's Hut, another one. Now this one, again, beautiful breakout here. I liked it long way back here. We had just a gorgeous little base here. Broke above this resistance, pulled back, found support there. You had a nice clean breakout here. Notice today the pullback, it found support at the 9 EMA and this previous breakpoint. Moving on to gold. Gold tried to bounce today off the highs. Again, this is your main resistance. The positive in the precious metals is that the stocks are leading. You can see by the GDX-GLD ratio. Silver did better today. It's clearly out of that channel now. GDX, same deal, little black candle here. Again, nothing's changed here. What I said on Tuesday, we're monitoring for a potential, right shoulder if we get some sort of pullback in this area. The stocks have been leading. Again, we're either going to pull back and form a right shoulder or we're not. All right. So if we extend up, if we go, if we were to bust up here again, clearly you wouldn't have a symmetrical, you wouldn't really have a neckline anymore. But that would still lead for a higher low pullback. Clearly we've broken symmetry here. And by the way, guys, I will be doing an educational video on symmetry. Some of the individual stocks, I'm not going to go through a bunch of them. BTG, this has been a nice one after breaking out of that channel. Newmont had a nice falling wedge, still holding up well. HMY is another one which I don't have in here. RGLD, there was a nice bottom setup that we had. Showed the RSI divergence. Right here was our setup. Right now it's trying to flag here. If it can break here, maybe you can get to the 50-day. Moving on to other trade setups. BABA, I showed on Monday, is a tight flag. Nice breakout today. Again, our original setup was down here in this falling wedge. Again, pro tip, falling wedge patterns always have MACD divergence. If you don't have MACD divergence and you have a wedge pattern drawn, it's possible you didn't draw your wedge right, because true wedge patterns always have MACD divergence. That's one thing I've learned over the years. All right, notice your moving average ribbon. It flipped bullishly stacked. Costco, I showed the other day, this tight coil. Nice follow through on Monday and today again. I love these coil patterns because energy's built up. These are the patterns you could buy the initial break, have a very tight stop. If you buy that, you could have a very tight stop like right there. So that's why I love the coils, because your risk reward is so good. And they call them coiled springs for a reason. The moves out of them tend to be quite strong. Zebra was an idea from ours last week. 200-day moving average. You also had a nice little pattern here. Motley Fool, long-term idea. Nice trade. Up 20 points from there. Home Depot continues to follow through from this ascending triangle pattern nicely. Same with Lowe's. CVX, one of our energy plays from back in September, continues to rock. Again, you could just simply trail a stop up under the 9 EMA if you're a short-term trader. CEIX, this is why, guys, you cannot get lazy. You need to use stops in place. This is a coal stock. BTU did the same thing. Had a nice little flag break yesterday or on Monday. And if you got lazy, didn't put a stop, you're now at a loss if you bought this trend line. That's why you always need to set stops in place, guys, because things like this can happen. DHT was a new long idea from Monday. Nice break of this little cup and handle pattern. Good volume. Rocket Lab continues to work lower from that short. Maybe it gets down to here. I think it would be a buy down here personally. OWL, here's another potential new long idea, kind of a cup and handle. HUYA, nice little flag off the lows. Easy swing stop right here, basically at today's lows, essentially, if it breaks out. BZUN, flag type pattern. TZA, here's kind of a, besides that VXX chart that I showed you, the VIX ETF, here's another hedge. This is TZA, inverse ETF for the Russell. So you got kind of a flag look here. Again, it may not break out of here, but it's just something to monitor if this breaks out or not. You can see you got a little MACD kiss with oversold stochastics. This is what I call my MACD kiss oversold stochastic setup. Can be a reliable trade. Obviously it needs to break out of this. So something to monitor there. And as far as futures tonight, guys, again, futures are not too much changed here. Here's my 240-minute chart. So they're down about 1.5 points now. Big deal. Again, we've had quite a move here on futures. A couple other things here. again, our longer term swing systems, like our KISS systems, you know, they all went long a couple weeks ago. The S&P daily went long on 10.6. You can see the vertical line. We've had 2 DVTs since. The daily KISS systems were stopped out back here on September 9th. And then they got back in essentially on October 6th. All right. These are trend type systems with these DVT trailing stops. And here's the weekly version. I mean, it's been long since, 2020. None of these DVTs have been hit. So obviously those of, long-term trend systems continue to be on par. The daily systems went back long on October 6th. Regarding our SPY systems, these are our typical reversion to mean systems. We did have one of the subsystems trigger today. Let me go to that. Here's the long systems to the SPY systems. We have 12 of them. So one of the breakout systems actually triggered today. You can see right here. We have 2 versions of the breakout system. The other one did not. That's actually the version I use for the website. Has a little better stats. The breakout system is the one reversion to mean system one system that is not a reversion to mean. All these other systems are reversion to mean, meaning they buy quick pullbacks in a market and exit. Unlike trending systems, which just try to stay long in uptrending conditions. So here's the breakout system. Let's look at the stats. Profit factor of 1549, 95 trades, decent profit curve. The version that went long today, which is this one, the one we don't use. Lower profit factor of 850, which is still very, very good. It is possible that this other version, breakout, may go long if we get a little pullback in the market. All right, guys, that's enough. I've been rambling. We'll see how the markets open on Wednesday morning, which is probably when most of you are listening to this video. So take care, and we'll see how the rest of the week plays out. Also, last thing, I do plan to do a series of education videos instead of just these, timely market videos. Take care.